So we're seeing the stocks move higher, or the futures move higher this morning. Stocks move higher yesterday. You're saying some of the dips that we've seen out there are buyable, but you're also saying you need to take some profits. So I want to talk to you specifically about yesterday. We see a pop in the markets after the president's comments. Is that a time to take some profits off the table after you see the pop, knowing that there could be other volatile moments in the markets with a tariff decision still to come?
Yeah, I mean, it might be. I think it depends on the names. I do think this is a stock pickers market, has been for about a year now. And I think that, when you have these times where you have big pops in whatever the name might be, and maybe it's been on a tear for a while, then it is probably a good time to take some profits, but not sell it completely if your conviction still lies there. You just want to take advantage of the volatility that I think is going to be more elevated this year. All
right. As I mentioned, we're still waiting for the Supreme Court to make a decision on tariffs. But right now you're seeing a lot of value, or you're liking value consumer plays. You gave us a couple names. One of them is Lululemon. The other one's On Holdings, and then also VF Corp. Why is right now the time to buy these names? Are you anticipating that the tariffs are going to be struck down, and easing of tariffs? Because that seems to be what's weighing on that sector.
Yeah, it's a really great question. I've actually been playing these more because I see that I think they've had some time. A lot of these names have had some time to figure out how they can, no matter whether their tariffs are in or tariffs are out, it really forces you to be more efficient in your operations. A lot of them are down quite a bit still, despite, any sort of recovery that they may have had because of an expectation of tariffs maybe not hitting. And I think there's some micro stories here where there can just be some recovery in the businesses and improvements in the brands.
Okay, when we're talking about Robinhood and your strategies, you're looking at pharma, oversold consumer we just hit on, and also regional banks. We're actually going to have a regional bank coming up, the CEO of a company coming up in just a bit. What do you see in a regional banks? Are you trying to play the strength in the U.S. economy, the yield curve? I mean, what are you seeing there as opposed to the big banks?
I think it's just the strength of the U.S. economy. It is deregulation. There'll probably have an ability to have a little more M&A. And I think there'll be some sort of one theory that I started forming, and this is just quite recent, especially with the president's speech in Davos, is that I believe that there'll be some more pressure on the bigger banks to lend more, to limit stock buybacks, which has been a huge profit maker for the banks over the last decade or so. And I think the regional banks will be able to steer clear of that and benefit, as you asked about what I see as a higher GDP for this coming year at least.
You're also sharing some of the most traded stocks on the Robinhood platform. They're two names that everybody knows. It's not that surprising. It's NVIDIA and Tesla. He says it also goes the same for options when it comes to those two names. I want to ask you about NVIDIA and Tesla in particular when it comes to retail traders. Does that put a floor on both of these names, the fact that retail traders will continue, at least it seems in recent years, continue to buy every dip and kind of come in on these names when they're under pressure?
I don't see it that way, actually, because NVIDIA and Tesla, yeah, they're most traded, but they're not necessarily the most bought. And so I actually see it. I was looking the last couple of days, and NVIDIA was one of our net sales across the platform over the last few days. So our customers tend to, buy on dips and sell on, they do take the profits when they're up a lot. So actually it's sort of the opposite. I think it almost creates a little more, maybe even creates a little more volatility because they're taking advantage of the swings.